Well, hello. There's a good situation happening on cable.
Wait. Matron, take them away.
And a warm welcome to one and all. It's your first time here. The big fella, that is the Scruffy trader. And I'm quickly going to jump onto the chart because I'm currently having a chat with Yanis in the squad. And we're looking at euro, dollar and cable because the two of them are doing exactly the same. Now, for all I've been marking these up here, cable is the better of the two. And as you can see, we're having a little chat about fib extensions, where they're going to, etc., and where the value points are. And while this lot are on, we're having a sing-song, and Pete's unconscious. I hope the night shift went well. Anyway, what am I doing? Well, it's 9:15. Don't normally trade before 9, but today is interesting. Look at this. Kathumba. And then it's stalled bang on a key level. So I'm a happy boy. What I'm going to do is I'm going to be trading this. And as you can see, it is coming to the thumper right now. So the game is, it's a retracement of this level. I'm only going for about 10 pips because it's against the greater grain. Because when I'm looking at this, it's kind of not saying what's going on, and the euro is telling you to sell it. Even though it's saying there's no trade here, when you have an excessive move like that, it can give you a quick scalp, because this is based on sort of the trend of the day, if you like, or the trend of the next hour. Okay. But of the two, this one is what I like the best. And let me tell you why. See, when something accelerates like that, it throws everything out of whack. So you've got to be able to read the charts. And there's some tools that you can use that are absolutely perfect for it. And the best one is a fib. And all you need to do, if you can recognize the move, is understand where it started, drop your fib on, and then use it as entry exit points. Now, if I'm going from the 23 to the 50, which is here up to there, that's about 20 pips. So that's not bad. So I've got a 20 pip range here that I can work with. Now, timing the market is key, because what if it breaks under here? Well, then you're going to have to wait a little bit. All right. So at the moment, we're not quite there, but we're not far away. So what I'm going to do is I'm just going to leave the camera running rather than rabble on. And you'll see the entry. And as this move evolves, I'll adjust to get in, and I'll look to make about 50 quid. All right. So let me crack on with it. there you go. In Fib we trust. I wasn't quite expecting that burst. There are various times, but I was expecting it to move, but not quite as quick as that. But what it's shown is if you have a structure that you have put into place and you stick with it, you're laughing. So happy days. It's the beauty of the markets. Sometimes they can catch you off guard slightly, but the prepared mind can help. So what has it done? Well, there you are. That's me pretty much done for the day. In fact, I am done for the day because that trade has crashed right through my wages. So I am done. And just out of curiosity, just to show you something. If I drop that fib back on, there to there, there is kind of your trigger line came in. It never went below. And if you look at the three parts of a fib, it is the drive, the consolidation, and the retrace. But look where it's stalled. Bang in this zone. Superb. So that's it, guys. Nice and simple. And why did I do it? Well, it's just, I always feel that if I'm talking to the guys in the Scruffy squad on Discord, whatever it is they talk about, I always have a feel that I should back up what I'm doing. And we were talking about fibs this morning, and I was kind of explaining to Yanis, little salute to you. Well, not explaining, just a few pointers, shall we say, about +1, -1 ways of looking at the chart and how it can gauge what's going on. And, well, it's just paid off. So, happy days. And talking of happy days, that it'll be a good one tomorrow. I'm doing targets for the next coffee with Scruff. But as a word of advice from this video, and you're talking about targets and consistency, because this is something that's questioned all the time. I've just said I'm done for the day. Finished. So it's now 9:30. I'm finished for the day. I've been paid. I don't need to go back to market. That's what makes me consistent. I wait for 1-2 trades that are sort of as good as it gets. In other words, proper good setups. Trade it, manage it, stop. And that's the best advice I can give you. You know, don't be greedy. Don't chase the markets. And certainly don't listen to bozos who keep saying, you'll make 200 quid an hour if you follow my system. Or you're going to make 30 grand a week if you follow my system. Bollocks. Absolute bollocks. And if you fall for it, well, you deserve everything you get. Because no one can be that stupid. It takes money to make money. Remember that, guys. And if somebody is making these ridiculous claims, in fact, here's a comment from my videos.
You ding dong!
I can't believe people fall for that shit. I genuinely can't. Because it takes money to make money. How much money do you think you need in your account to generate that amount of cash? A colossal amount. It's not a couple hundred quid. You're not even talking a couple of thousand. You're talking tens of thousands to be able to generate that amount of income.
No way!
So there you go. Happy days. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.